Hi, and welcome to the Market Alert for Monday, the 7th of June 2021. So May payrolls miss, 559,000 jobs added, and well below the expectations that was forecast, but the unemployment rate actually dropped. So they used this last bit here to pump the markets to the upside. It was bad news, but it was also good news. So they used it to their advantage. The dollar reaction was to dump on the jobs data. Bonds and stocks were bid, also the metals, but it isn't held over the weekend. It seems bad news is good news, what I just said, as Powell and his pals have more excuses to stay on the sidelines while inflation rips. Implied volatility is also lower as well, down to 12.8. You can see we're down in these lows. For the implied volatility, the lower this goes, the bigger the correction will be when it does eventually turn up. News, there is no news for the next couple of days, absolutely nothing, and there's no major news out this week either, so the market's going to have to make its own direction. So let's start off with the Dow, and we can see here for Friday the market moving higher, trading through the 278s, one drawn from here to here, and the second one from this high to here as well. Market just sitting above these at the moment. This close tag here, or the open and close, I don't know why that's Saturday, which is unusual, so that'll have to be corrected by the brokerage, but that's not correct. But at the moment, price is sideways, sitting on the 78% retracements there. Just have a quick look at the overnight, if I can find the 5-minute chart. Price is moving lower back through Friday's high, which we can see here, down 70 or 80 points from the high easily. It's about 80 points, and price is just drifting back at the moment, about a 50% retracement for the Dow. Meanwhile, in the DAX, again, you can see that price is higher on Friday, and they managed to use the news in the afternoon to move the DAX to a new all-time high. This is the new all-time high, and you can also see that we went through the 89 that I had drawn in as well. So at the moment, we've got a bit of weakness here. Let's just draw in some fib retracements, because when the market puts in a new all-time high, it generally has a bit of a pullback, even if it's just over one day. So watch these areas for the market to pull back to on an intraday basis there. Overnight, again, I'll use the 5-minute chart. You can see a similar thing where the market has sold off initially as prices opened here, traded sideways. They gap lower, actually. They came back and tried to fill the gap and then traded down to the DP, which the market is currently holding at, and also this BRN here, which is going to be the 15,650 level. Now, the high of Friday is, of course, the all-time high, so we can keep an eye on this one if prices do manage to move back to the upside. If they decide to head to the downside, as you can see at the moment, because we're at the DP, it's the same distance to the high as it will be more or less to the low as well. So again, depends what they want to do. Like I say, there's no news to move the market at the moment, but prices do tend to have a bit of a pullback or trade sideways following new highs, where you will see the previous ones as well before they go on to make a new high. So keep this in mind as well, that the short side is likely to show some pressure, given that we've just made a new all-time high in the German DAX. Let's have a look at the price action from Friday. I did actually record this, and you can see there we've got the all-time high marked in there. Now, I did say in Friday's market alert, expect the market to be quiet, waiting for the non-farm payrolls, because it was hammed up that much. And you can see in the morning it just barely moved. It was just drifting sideways, and then it just stayed like this all the way through, waiting for the news, which once it came out, and then pick the market up a bit. That's not the news, it's the next line here now. So the news came out disappointing, and you can see prices then sideways trying to decide what to do. But as we've said before, bad news is good news, because the bad news isn't as bad as it could have been, and then they'll use this to bring the markets back. So we then see the cash market open and prices trading sideways. You can see if you've got sideways of red like you've got here, then and also here, the market isn't going down, it's only going to go two ways, either continue and it's sideways move, or change and move to the upside. And that's what we see here, where prices then move to the upside and continue to move and trade all the way up to the all-time high. They managed to get through this and to the BRN and then start to drift, but you'll see how the market just continued to move. They seized the opportunity with the payroll figures, and the DAX came all the way back up there, and then it just started to see some profit taken as we headed into 4:30. So a quick look at the metals. Silver responded with a move to the upside, but has since been slammed back on the overnight. I'll look at this in a bit more detail. You can see here, as soon as the during night, Asia have managed to hit the silver price, bringing it back. Nothing's changed, except they've seized the opportunity to do this. Now, as we go towards the Basel III 28th of June deadline, which I think, if I've got it right, you can't trade. You have to trade the number of futures contracts for the amount of physical that you hold, I think is what the basis of it is. I don't really know, but one thing that I do know is that they're going to use this opportunity to slam the metals prices over the next few weeks to get out of any short positions that they've got and reduce any sort of losses. So this is probably the start of it. It's only the 7th of June, but you just never know with these banks how they're going to play this. The dollar, you see, hasn't really moved that much to the upside, which obviously is inversely related. It's above the 20-bar moving average at the moment, but that's going to go to determine what they can do today as well. If you have a look at the 5-minute chart, you'll see it's just drifting up and down. I've also got a 30-minute chart. You can see Friday's reaction there, and then you can see them buying back in here. Got a bit of selling there. But at the moment, the market sitting quite nicely, heading towards the DP there as well at the moment, which is going to put further pressure on the silver price, which you can see there at the moment. This is the 30-minute silver. You can see this trading up to the 200 MA on Friday as well. Like I say, drifting back at the moment. I'm going to look for an opportunity to buy. And I'll probably use the 30-minute chart if it finds some support. I'll just bring that back up. It's just disappeared. It's in here somewhere. So from this low to this high, I'll have a look at sort of the 89% area, which is 27.34. In fact, we'll probably get a test of that, because we've got a low. I'm just going to switch to the daily. Yeah, we've got the low at 27, haven't we? That could be a possibility. So I'll have a look when the market heads down to this. And I'm sure they're going to use this Basel III opportunity to do exactly this over the next few weeks. Meanwhile, in gold, also back on Friday, but also too coming under pressure on the overnight market there as well. But not a lot we can do about it, as like I say, the banks are going to use as whatever opportunity they can to try and get gold and silver down over the next 20 days before Basel III is implemented. Fingers crossed they fail, but like I say, you've got to keep that in mind in the metals markets going forward for the next 20 days. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.